MD Investor channel. Channel where we're talking about personal finance, setting goals, achieving goals, and we talk about passive income a lot. We talk about taking responsibility for our personal finance by increasing our financial IQ, teaching our children so we can break the cycle of generational poverty. Before we get into the new video, if there's people out there you think can benefit from this information, let them know about the MD Investor, whether they be colleagues, friends, family, acquaintances, whoever you think they are struggling financially and that really can't get ahead because of basic financial problems. Let them know. You have nothing to lose. So today's video is going to be a video on the dividends we received for June 2020 in our M1 Finance. We've been chronicling the dividends since November of 2019, and we are doing them once a month. So today is the video for June dividend. We got 35 checks in the month of June. Think about it. Does your regular job give you 35 paychecks in 1 month? Unlikely. So that's one of the positive things about dividends. I mean, depending how big your account is, depending how diversified you are, depending how many companies you hold, you can get multiple checks during 1 month. So June was a big month for us, and we got 35 checks. So let's go into it. I don't want the video to be too long. So like I said, the 35 checks, let's get into it. So on June 1st, our first dividend check came in from Aflac. The insurance company. You see the commercial with the duck, Aflac. So they're involved in insurance and so on. It's a new position that they started. So we got a paycheck of $3.20. Same day. And on June 1st, we got paid by Walmart, the biggest retailer out there. And we got a small position there with Walmart. And we got a $1.51 from Walmart. Like I'm gonna go through these a little quick because I don't want to, make a long delay. So that was June 1st. We can take a look at the same day. We got a check from Wells Fargo. It's broken up in 2 checks, but it essentially total of $11.72 from Wells Fargo, the bank. Quick comment on the banks. The big banks now, if you guys haven't heard, is that because of regulations from the federal authorities, the banks, because of what's been going on with the coronavirus, they want to make sure that banks are well capitalized, make sure they have enough money, so things doesn't go really bad as in 2008. So the big banks have been mandated that they cannot raise their dividends for the third quarter. They can keep it the same, they can cut it, but they cannot raise their dividend. Wells Fargo, I think, out of the big 4 banks, being Bank of America, Citibank, and Chase, Wells Fargo, I think is the only one of those 4 that have decided to cut the dividend, not suspend. They decided to cut the dividend, so it's a little disappointed. But that's going into the third quarter. So we got paid $11.72. This is a new position for us. So that's 3 checks on June 1st. June 4th, we got paid from Unilever. Unilever is basically a competitor of Procter & Gamble. It's in the space of the consumer packaged goods, so soaps, deodorants, Vaseline, stuff like that, home care products. So we got paid out $4.82 from Unilever. Let's go on. On June 5th, we got 2 checks on June 5th. So the first check on June 5th was from Honeywell. Honeywell is a big industrial company. So they're involved in a lot of different things, from the thermostats in your home to different kind of products that kind of work in the background of your like life. You don't really see it out front. But it's a big company. If you want to take a look a little more detailed in Honeywell, because I don't think we've talked about Honeywell before, let's go take a look at Honeywell. Ticker symbol HON. So like I said, guys, I'm not trying to make this video too long because I know it's a lot. Honeywell International, ticker symbol HON. Let's look at a quick little thing over here. The 52-week high, the 52-week low, $101. 52-week high, $184. So at the price where we are right now, 145 is somewhere in the middle. The dividend rate, they paid $3.60 for the year. So you divide that by 4, and that's how much they pay per quarter. The yield is not that great, about 2.5% yield, not that great. We can look a little into the dividends. So 90 cents per quarter, with the yield is not that great, 2.5%. Like in general, I like 3% at least, but it's a good company, and I have other dividend that's a lot higher yield to kind of make up for it. So 2.5% dividend yield. Annual payout is $3.60. The payout ratio is great, right? A little over 51%. So we talk about payout ratio is that the amount of the earnings company pays out in dividend, right? We don't want it to be too high. So that means 51%. That means there's room to grow that dividend. The 5-year growth rate has been very good, 13.5%. 5-year growth rate. That's great. So that means if they continue to grow that dividend at that rate, we're gonna have a lot of benefits in the next couple of years. Dividend growth, 16%. So let's go back to the M1 Finance portfolio. So on the same day, June 5th, we got paid from Pfizer, and they paid us $6.31. Pfizer is in the healthcare sector, the pharmaceutical company in the healthcare sector of the economy. We have not talked about Pfizer before, so let's look at Pfizer for a minute. Pfizer, ticker symbol PFE. Here we are, Pfizer, ticker symbol PFE, trading about $34.51 in the 52-week range. The low has been about $27, the high has been about $44. The dividend yield, 4.4%, so not bad. You see, that kind of makes up for the lower yield of the Unilever we just talked about. So we have one 4.4% dividend yield, and the dividend rate is about $1.52 per year. You divide it by 4, and it pays. Correction, it's about $191 billion company. So a big company. Let's look into the dividends. So it's paid 38 cents per quarter. Dividend yield 4.4%, like we said. Payout ratio also low, right? 55%. Again, room to grow the dividend. In terms of the growth rate, about 6.7%. So not as high. The growth rate is not as high as I believe with Honeywell we talked about. Not as high, but it's been growing the dividend for about 10 years. So obviously a good company to have. We also have Johnson & Johnson. So it's a good. We have a little diversified. We have a little diversification within the healthcare space. Johnson & Johnson, Pfizer. So that's what we're talking about. If one goes down, we have the other one to offset it. Let's go back to the M1 Finance. June 8th, we got paid from Southern Company. Southern Company is a utility company. I think it's primarily operates in the southern United States. But again, we have Con Ed, I think we talked about in the last video, and now we have Southern Company. So good to be diversified, even within that one sector. So they paid out on $8.14. The Southern Company. We can, let's move on. Johnson & Johnson in the healthcare space, right? Specifically pharmaceutical. So we have Pfizer and we have Johnson Johnson. So that's what you call diversification within a sector. $20.39. Johnson and Johnson is a blue chip company. We can go there and take a look. J&J. Pretty much anybody involved in dividend growth investing has J&J in their portfolio. Johnson and Johnson, ticker symbol J&J, trading for about $140.97. The range, the 52-week range, 52-week low, it's about $109. At high, it's about $157. So it's kind of close to the highs. The PE ratio is 18.25 with a PE ratio between 9, 10, and up to like 18, 19 is pretty good. So kind of like fair value. You're not getting a great deal at this price, but it's a great company to have. The yield is about 2.87%, so under 3%, but it is definitely a rock star. It has a great history. One of the dividend, I believe it's a dividend aristocrat, I believe. Let us go to the dividends. $1.01 per quarter. So a yield about 2.87%, about $4.04 per year. And it could payout ratio, 52%, room to grow. It doesn't grow the dividend that great, 6.3%, but look how long it's been doing it. 57 years. Correction, it's the dividend king. 57 years. So you've been growing a dividend for at least 50 years. You're a dividend king. Correction, not aristocrat, dividend king. Dividend aristocrat, you've been raising your dividend for 25 years. Let's look at the dividend growth of Johnson & Johnson. This is what you want to see, guys. Back to 1990, 16 cents per quarter. Goes up to 19 cents, 22 cents. You see this graph here? People who have owned the stock since, for all these years, look at what they've seen. They are more than keeping up with inflation, and they have seen their dividends grown at an astronomical level. Okay? Astronomical level. So this is what we want to see, guys. Dividends is going up and up and up and up. So a great history, 57 years. Let's go back to our portfolio. Definitely a company that I like to grow my position and increase my share count. January 10th, we got a couple of checks on January 10th. Archer Daniel Midland, $7.17. That's a company that's kind of in the food processing and manufacturing space, $7.17. Chevron on the same day paid us $20.89. A company in the energy space, right? One of the big gas companies. We know they've been under a lot of pressure lately. Their prices have been dropping. Their share price has been dropping. You go to fill up your car, you see that it costs a lot less. But the problem is because they're collecting less and less money, they are in financial stress, financial pressure, and a lot of them have to decide, are we gonna can we afford the dividends? Can we afford the dividend? So Chevron, $20.89. Same day, ExxonMobil paid us total of $26.19. $26.19. Same day, IBM paid us a total of $10.45. IBM is in the, I guess we could call it like maybe the technology space. IBM. I don't think we've ever talked about IBM before, so let's quickly look at IBM. IBM. IBM, International Business Machines Corporation, IBM, trading at $119.70. $119.70. And the 52-week range, about $90 at the low and at $158 at the high. So they're definitely close to the highs. Actually, they're more like in the mid-range. The PE ratio, 10.8, so a pretty good PE ratio, price to earnings ratio. So I mean, you get like a good deal for your money. The yield is 5.45%, and the market cap is $106 billion. Let's look at the dividend for IBM. Total of $1.63 per quarter, and they paid it 4 times a year. The total of $6.52. The dividend yield is 5.45%. It's pretty good. Payout ratio is pretty good, 58%. So they have room to grow that dividend. Okay, and over the last 5 years, the dividend growth rate is about 8.63%. The dividend growth is about 21 year. So that's pretty good, right? Over 5% dividend yield, $1.63 per quarter. The payout ratio is pretty low. They have room to grow. Hey, that sounds like something that we wanna grow that position. So that is IBM. Same day, June 10th, we got paid by Target, or some people say Target. They paid us a total of $2.80. I don't think we've talked about Target before. Let's go to Target and see. Ticker symbol TGT. Let's go there quickly and touch on Target. Target is one of these companies that has prospered during this pandemic, stay-at-home type of thing, because they have stuff that you need regardless: soaps, detergents, clothes, so on. So Target, ticker symbol TGT, trading at $119.12. The range, 52-week range, the low of about $80, and the high of about $130. So it toward the high of the range. The PE ratio is about 24, so pretty much it's kind of richly valued. The yield is about 2.28%, so not a high dividend yield. So what you can tell already that I have a mixture in my portfolio. I have a company like Target that are low yielders relatively, and then I have companies that are higher yield. You have companies that are lower yield, and maybe the growth rate is good. You have some companies that are higher yield, and maybe the growth rate is not that great. And they have companies like in the middle. Actually, they have both the higher yielder and they grow it fast, like AVGO. So the yield, like we said, is 2.28%. It's about a $59 billion company. Let's look at the dividends for our Target. Target is paying 68 cents, paid it quarterly. So annual payout is $2.72. Like we said, the yield is pretty low. Payout ratio is pretty good. It's 54%, so there's room to grow. The 5-year growth rate is about 6%, but definitely way above inflation. So, your money will keep its value. Let's look at the dividend growth for our Target. And it's not bad. The 5-year growth rate was at about 6.47%, not bad. So, you see here in 2001, 22 cents, 24 cents. You see it keeps going up. So that's not bad. So, and that's what we're talking about. Even though it's a low dividend yield of 2.2%, it's growing it pretty good, and there's room to grow. So that's something to take advantage. So we're going to try to increase our position in Target. Okay, let's move on. So same day, Target, we on June 10th, UPS paid us $6.22. Microsoft paid us on June 11th, $2.20. Microsoft, let's go to Microsoft. So we can kind of bring something out again. Microsoft ticker symbol MSFT, I believe. Microsoft, we know about Microsoft, right? It's in the technology space. Trading at about $206. The 52-week range. The low was about $130. The high was about $208. So we're very close to the highs. So not a great point to buy them. The PE ratio, $36, pretty high. Pretty high PE ratio. That means you probably want to wait for the price to come down. So it's a pretty high PE ratio. With a PE ratio, it's the price to earnings multiple. It kind of says how much money you're paying for $1 in earnings. So 36 is pretty expensive. With it, anything from like the low, from a 10s, 9s up to like 18, it's considered fair value. So 36 is a very high PE ratio. The yield, look at the yield. Less than 1%. Nothing, right? Yield less than 1%. So it's a very low yield. and it's probably because the price has shot up so much. So very low yield. It's a big company, 1.5 trillion dollar valuation. Let's look at the dividends. So someone might say, why would you buy something that P ratio is so high? And you're right, you might want to wait for the price to come back down. It's less than 1% yield. So the amount is 51 cents per quarter, total of $2.04 for the year. Dividend yield is less than 1%. The payout ratio is very low. You see that? Very low payout ratio. That means they have room to grow that dividend. And the 5-year growth rate is double digits, like 10.5%. And they've been growing that dividend growth for 16 years. So there's room to grow. It's only 35% payout ratio. There's room to grow, and they've been growing it pretty good. So this is one of the examples of a company you might say it's such a low yield, which is true, but because it's grown the dividend so fast and there's room to grow, you might hang in there because there's going to be a benefit. Okay, let's move on. We got paid on June 12th. Two checks. We got paid from Dow Chemical, $26. And so this Dow is in the materials space of the economy. Let's look at Dow. I mean, they're involved in like chemicals and so on. We can look at it quickly. Ticker symbol DOW. Ticker symbol DOW is trading about $41.50, 59 cents. And it's about in the middle of a 52-week range, the low of $21.95, the high of about $56. The PE ratio 36, also highly, highly valued. The yield is 6.73%, which is pretty good. It's a $30 billion company. So 6.73%. Let's take a look at the dividends. They're paying about 70 cents per quarter, and they paid total for the year about $2.80. The dividend yield is pretty high at 6.73%. We said the dividend yield could be high either because the dividend is going up or the price is going down. Right? Those are two. Now look, it said the payout ratio is 244%. How can the payout ratio be so high? Right? Usually we say the payout ratio is about how much money, how much percentage of the earnings they're paying out in dividends. So obviously that's something that we'd have to look in a little deeper to see how can the payout ratio be so high. We can go to earnings real quick. And we see that the earnings that was announced on April 30th, actual earnings were about 59 cents, 59 cents per share, and the dividends was 70 cents. So it's paying out more in dividends than it's earning. Obviously, that's a red flag. That's something I'll have to look into. But we'll do, we're going to move on. Like I said, we like to see payout ratio below 50% and make you feel more confident. Let's go back here. June 12th, we got paid by 3M. 3M is the industrial company, making off the post-it notes and so on. They paid us $12.06. June 15th, we got paid a couple of checks. DuPont is a manufacturer, is a company involved in like materials. And materials are like semiconductors and so on. They paid us $8.46. McDonald's paid us twice. It's really one part, it's two checks. McDonald's total of $8.42. McDonald's $8.42. Right, we don't have to mention McDonald's. You know about McDonald's. Next, Terra Energy is a utility. They name about like natural gas. They paid us $3.93. Also on June 15th. Okay, so let's see. June 15th again, realty income. We know by realty income, it's a REIT, a real estate investment trust. It's also a monthly payer, and it paid us a total of $7.02. June 15th, we got paid by Tyson Food. Tyson Food, it's in the we say the consumer non-discretionary, right? It's about food. So regardless of what's going on, recession, no recession, you got to eat, right? So Tyson Foods paid us $3.94. It's a new holding. So let's go and look at a Tyson Foods ticker symbol TSN. You'll see the commercial right for Tyson's chicken and so on. Tyson Foods ticker symbol TSN, trading at $58.45. The 52-week range, the low is about $42.57, high is about $94. So it's in a good spot right now to buy. PE ratio is 13, so it's a good PE ratio. It's kind of getting a good deal. The yield is about 2.87%. It's about a $21 billion company. Let's go to the dividends and take a look. So it paid about 42 cents per quarter. It paid that 4 times a year for about $1.68 per year. Dividend yield is 2.87%, like that. Not that great. However, this is what you have to look at. The dividend yield, you buy it today, or whenever you buy it, you're gonna be getting a low yield, 2.87%. But look at the payout ratio; it's very low, so there's room to grow the dividend. And look at the 5-year growth rate, an astounding 36%. By the rule of 72, if you take 72 divided by 2, you take 72 and you divide by 36%, look like the dividend will be doubling like every 2 years. And they've been growing the dividend for about 8 years. Let's look at the dividend growth. Now look at this. From 1990, about 1 cent per quarter, right? Look how sharply this dividend is going. In 1997, there was a split, 3-2 split. Look how the dividend is going up. And that's where that growth rate of 36% goes. Look at it. Like a hockey stick, straight up. Straight up. So that's amazing growth rate. Okay, let us go back. So that's definitely a promising one. Tyson Foods. Now, where are we now? We are June 15th. We got paid. Con Ed paid us $4.83. June 16th, we got paid 2 checks on June 16th. Duke Energy paid us $4.01. And no, Duke Energy, correction. Duke Energy paid us $13.46 combined. $13.46. June 18th, we got paid from the Home Depot. And the Home Depot paid us. Let's see where I got it in my paper here. $13.37. June 19th, BP, British Petroleum, one of the big energy companies, paid us $21.54. On June 22nd, Dominion paid us $15.79. And then June 22nd again, Royal Dutch Shell, the gas company, the energy company, paid us $9.44. June 29th, Gilead, also in the pharmaceutical space, they paid us $8.60. Let's take a look at Gilead. I don't think we've looked at that before. It's also a new position, GILD. So now you're seeing 3 companies in the pharmaceutical space, the healthcare space, in my portfolio: Johnson & Johnson, AbbVie, Pfizer, and now Gilead. So 4 companies you've seen. So Gilead, ticker symbol GILD, trading for about $76.35. The 52-week range, the low was about $60 and the high was about $85. The PE ratio, 11, so that's a pretty good value. And the yield is about 3.5%, $95 billion company. Let's look at the dividends. 68 cents per quarter, pays 4 times a year. Annual payout of about $2.72. Dividend yield of 3.56%. Low payout ratio, 41%, so there's room to grow the dividend. So that's good to see. You want to see your dividends growing. Okay, so dividend growth, um, not super great, but it's growing. Okay, and again, you see diversification within a sector, which we've talked about. So if one of the pharmaceuticals goes down, I have others to balance it, right? Um, let's go back to the portfolio. We're almost done, guys. I know this is a long video. June 29th, Shaw Communication, that's a Canadian telecom company, also monthly payer, paid of $4.12. And then June 30th, again, the last day of the month, we got a couple of checks. Last day of the month, June 30th, we got paid by Broadcom. Ticker symbol AVGO is a semiconductor company involved in making chips and stuff for like smartphones and so on. They paid us $19.10. We've not looked at that before. Let's take a look at it. AVGO, and then we're gonna almost be done. AVGO. So AVGO, it's a Broadcom, ticker symbol AVGO, trading for about $315. The 52-week low, $155, 52-week high, $331. So we're kind of close to the highs. The PE ratio is 14, so it's kind of fairly valued. The yield is 4.12%, so pretty good yield. It's a $126 billion market cap. Let's look at the dividends. So it pays $3.25 per quarter, so 4 times a year. Annual payout is $13. It's a 4.12% dividend yield. Payout rate is 60%, so there's room to grow. The 5-year growth rate has been 55%. So that's tremendous growth rate over the last 5 years. Tremendous growth rate. Let's look at that. So you see the dividend yield here, 40 cents per quarter in 2011, 61 cents per quarter, 88 cents per quarter in 2013, $1.23 per quarter, $1.64 per quarter, $2. Look at these big jumps, $2.52 per quarter, $4.81 per quarter, $6.15 per quarter. Now this got to be annual. 2017, they have the amount $4.81. And then, yeah, this got to be maybe this is annual. And yeah, it's a tremendous growth rate. Hope to grow that position. We are almost done. Let's go back. So the last day of the month in June, long-term care, right? Paid as a monthly payer, $2.91. Lamar Advertising, if they REIT, they're involved in those like when you drive by the highway, you see the billboard, and sometimes they'll say Lamar on it. So it's a company involved in a REIT, a lot of advertising and stuff. They pay monthly, and they got us $4.17. $4.17, their quarterly payer. Pepsi paid us last day of the month $6.15, And then last company, public storage. They're involved in public storage, right? You see the bright orange sign. You have so much stuff in your house, you have no way to store it. You go to public storage and you rent a locker or a room or whatever. They paid us $8.63. So long video, guys. Thanks for thinking. Thanks for sticking to the end of it. Total dividends in June 2020 is $341.64. Total dividends in June is $341.64. So, guys, I hope you can see the power of compounding interest. The $341.64, obviously I could take it out as cash and pay my phone bill, go to dinner, but I don't. I take it and I reinvest it right into the companies and get more shares to create a snowball effect. I hope over the last, I guess, 5 or 6 videos now, probably seven videos now, you'll begin to see that the dividends are growing. Obviously, June was a big month. I mean, almost half my portfolio paid out, about 34 companies, right? And it's hundreds of dollars. We started with cents and a couple of dollars, and now you've seen almost $350 in dividends. We're going to continue to show this. This is not to brag or anything. This is to really show that passive income is not just theoretical; it's actual. People are doing it, and just begin to think ahead, begin to project, and begin to imagine a portfolio that is generating $341 in passive income per month. What if, or let's project a year in the future, 2 years in the future, 4 years, 5 years in the future, a decade in the future, 15 years, 20 years, right? This is what the power of compounding, starting early, being serious can do. Again, guys, MD investor in the house. Here to motivate you, here to encourage you, here to tell you that, even though we weren't taught this stuff, even though we don't have an MBA, even though we don't have a CPA, we're studying and reading, and we can do this to educate ourselves and our children and break the cycle of generational poverty. I will see you on the next one. Again, guys, if there's people out there who can benefit from this, hey, let them know about the MD Investor, and I'll see you on the next one.